This is Nightly Business Report with Sue Herrera and Bill Griffin.
Win streak snapped. The Dow falls for the first time in 4 sessions, taking a spill right before the closing bell rang.
Bolstering the economy, President Trump said he's considering a number of tax cuts as growth concerns mount.
Speedy delivery. Domino's is creating an innovation lab, and it has nothing to do with its menu. Those stories and more tonight on Nightly Business Report for Tuesday, August the 20th.
Good evening, everyone, and welcome. The strong run of the past few days did not last. Stocks slipped as, you guessed it, bond yields retreated. Global growth concerns hung over Wall Street, as did geopolitical uncertainty. And all of that made for a down day that saw losses accelerate into the close. The Dow Jones Industrial Average fell 173 points to 25,962. The Nasdaq was down 54, and the S&P 500 slipped 23.
One of the bright spots today was Home Depot. The world's largest home improvement retailer reported better than expected earnings, and that sent its shares up more than 4%, making it the top performing stock in the Dow today. But the company did lower its sales outlook for the whole year amid concerns about the economy and the trade war. Courtney Reagan has more.
While recession fears loom and there are signs of slowing economic growth, Home Depot executives say the consumer remains healthy and the housing market is stable. Though it wasn't a perfect quarter for the home improvement retailer, lumber price deflation continues to weigh on sales. Prices are more than 50% lower than a year ago, and a big reason comparable sales disappointed. Unseasonable weather delayed some home improvement projects early in the quarter, though as the weather improved, so did sales. However, sales of big ticket items like flooring and appliances were strong, as were sales to professionals like contractors, as pros continue to work through a backlog of projects from poor weather earlier in the year. But Home Depot did lower its annual sales forecast as it expects lumber price deflation to continue and the broader impact tariffs could have on consumer spending. Chief Financial Officer Carol Tomei told me she estimates total tariff exposure to Home Depot is around $2 billion, or 2% of U.S. sales, which she calls, quote, manageable for our scale and size. Home Depot is taking a 3-prong approach to manage tariffs, negotiating with vendors, finding other ways to mitigate higher costs, moving product production, and lastly, making careful decisions about which items it can increase prices on. While Tomei is confident Home Depot can manage the tariffs, she added, quote, what happens to consumers more broadly with tariffs? If consumers start to slow down spending more broadly, could it actually have an impact on GDP? A concern echoed by Wall Street.
The risk around tariffs, I think, is very manageable. We estimate the average retailer will only have to raise prices 5 to 7%, and that's assuming that the vendors don't help them out. So it's really going to be a question of what happens in 2020, because if they don't go away, that's a whole nother discussion. But
even if it can manage tariffs, not all analysts are convinced Home Depot will continue its strong run.
When we look at the full year 2019, we're past Home Depot's peak same-store sales growth year, which was 2017. We're past their peak earnings growth year, which was 2018. So now we're cycling through all these peaks, and we're at a point of deceleration. The stock is up 25% this year. Have the fundamentals improved 25% year to date? I don't think that we're at that point.
Leaving a lot of uncertainty in the wake of a relatively stable quarter. For Nightly Business Report, I'm Courtney Reagan.
Sales also missed the mark at Kohl's, despite reporting better than expected earnings. The retailer forecasted a steeper than expected decline in profit margins due to a potential hit from new tariffs on imports from China. That sent the stock down by more than 6%. Shares of TJX companies were also lower. The parent company of TJ Maxx and Home Goods warned that third quarter profits will come in below estimates on an increase in competition.
And in Washington, the focus is very much on the economy right now. Even though the president has said we're far from a recession, he admitted today that he is examining a number of stimulus measures, including more tax cuts. Eamon Javers is at the White House for us tonight.
Some back and forth over the past 24 hours here at the White House over the idea of a payroll tax cut. Yesterday, the White House denying a news report that suggested that the White House wanted to move forward on a payroll tax cut. Well, today, the president said he's considering it. Here's what the president said today, talking to reporters in the Oval Office and also mentioning the idea of indexing capital gains, another tax cut proposal the White House is considering.
A lot of people have been talking about indexing for many years, and it's something that I am certainly thinking about. I can say that a majority of the people in the White House at the level that does this kind of thing, they like indexing. So it is something I'm thinking about. Payroll taxes, I've been thinking about payroll taxes for a long time. Whether or not we do it now or not is, it's not being done because of recession.
The president there obviously sensitive about the idea that there's a recession looming. He insists there's not, and that's not why they're considering these ideas. Nonetheless, he's also pushing the Federal Reserve today for a 100 basis point cut in interest rates, although the president says he doesn't want that cut all at one time. We'll see what the Fed has to say about that, too. For Nightly Business Report, I'm Eamon Javers at the White House.
Overseas, the British economy shrank for the first time in almost 7 years. Economists cite a combination of Brexit uncertainty and slowing global growth. The slowdown occurred across Britain's manufacturing, construction, and agriculture sectors. According to official statistics, only the services sector showed growth.
Italy has its own economic challenges right now, and tonight it also is without a prime minister. Giuseppe Conte abruptly tendered his resignation today after days of political infighting, adding a new level of uncertainty to a country with an enormous pile of debt. Villa Marx reports for us tonight from Rome.
Italy's professor-turned-premier Giuseppe Conte faced down rows of unruly opposition senators Tuesday afternoon. The country's political class was forced back early from summer recess, and the school's new rebels came out in force. When Conte lectured, they hectored, including many members of a party that until today had served with him in government. Conte's antagonist-in-chief remained, as in recent weeks, his deputy and interior minister, Matteo Salvini.
Dear Matteo, by starting this government crisis, you take a great responsibility towards the country. You announced this crisis, asking full powers to rule the country, and again recently I have heard you calling the people in the squares to support you. This idea, allow me to say, is preoccupying me.
Seated at his right-hand side, Conte's very own Judas smirked and sarcastically shirked responsibility for the failures of a government he helped form just last May.
I am sorry that you had to put up with me badly for a year. I didn't understand that. I am sorry about it.
Salvini, with his populist power paunch, has stayed in campaign mode much of the summer. But even his natural political allies say he's mistimed a push to seize power with his demand for fresh elections.
He thought that only he was the wise guy to make the moves and the others would stay there waiting for him to have his final blow. But they did what he did.
Salvini's former partners, the Five Star Movement, could now join unexpectedly with the opposition Democratic Party to form an alternative coalition. But that's a tie-up that could also prove just as tortuous. Conte's decision to resign leaves a large vacancy tonight in the building behind me, the Palazzo Chigi, the powerful centre of Italy's executive branch. And as investors and businesses follow the consultations and negotiations that will now be spearheaded by Italy's president as he tries to craft a new parliamentary majority, the political uncertainty and the potential risk that may accompany that could well remain rather high. Italy's finance ministry must submit a draft proposal for its annual budget to the European Commission by mid-October. Last fall, Italy's budgetary battles in Parliament spooked global markets. And despite record low yields elsewhere in Europe, Italy remains an economic outlier with its massive debt pile and little political will to trim spending. The jeers and jokes in Parliament suggest that far too few politicians here are prepared to take those challenges as seriously as markets might like. For Nightly Business Report, I'm Villa Marx in Rome.
It is time to take a look at some of today's upgrades and downgrades. AbbVie was upgraded to overweight from neutral at Piper Jaffray. The analyst says the worst may finally be over for the drug maker's stock, which is down more than 25% so far this year. The price target is $80. Despite the upgrade, the stock fell a fraction to $66.41. Beyond Meat was upgraded to overweight from neutral at JP Morgan. The analyst cites the potential for the plant-based burger market to acquire new customers. The price target is $188. The stock rose 6.5% to $153.97. HP was downgraded to neutral from buy at Citi. The analyst cites limited catalysts that would move the stock. The price target is 21. The stock slipped 1.5% to 18.91.
Still ahead, investors first. CEOs say maybe not. Yesterday, we brought you one side of the debate. Tonight, the other.
A top antitrust official at the Department of Justice today said a couple of dozen states have expressed interest in investigating big tech. McCann Delharim made the comments at the Technology Policy Institute.
I think it's safe to say that we're all in the same place, having had conversations with the state attorneys generals at the federal level and the state AGs. I don't think, there are different stages of an investigation.
The investigation is expected to be bipartisan, and as we reported last night, the state attorneys general want to examine whether some dominant companies are using their power to limit competition.
Apple is reportedly spending a lot of money to compete with Amazon and Netflix. The Financial Times says that the company has committed more than $6 billion for original programs as it prepares to launch its streaming service called TV Plus sometime this fall. Yesterday, Apple released a trailer for a new original series called The Morning Show, starring Reese Witherspoon and Jennifer Aniston, which reportedly cost more per episode than Game of Thrones cost in its final season.
And it's not just Apple spending more, consumers as well when it comes to electronic devices. And like other areas of retail, how and where those purchases are being made is changing. Josh Lipton has the next installment at our look at the American consumer.
It used to be that shoppers wanted to touch and feel cool new electronics before buying them, but not anymore. Many are okay spending money sight unseen, which is why sales of devices in-store are falling and purchases online are rising, and they're willing to pay up for what they want.
The math there tells you that average selling prices are going to be going up as consumers make those choices to spend a little bit more than they might have in the past.
The industry is entering a new phase. Many consumers already have the gadgets they want and need, so when they buy new electronics, they often trade up for more expensive items.
I'm looking to buy a new phone, actually. I'm using the iPhone 6 right now, but it's pretty old.
I really like AirPods, they're pretty convenient.
My roommates and I own a TV.
That's where demand is strongest for things like high-end wireless headphones, as well as health and fitness devices. That benefits Apple with its Watch and AirPods. Another hot area, smart home products like Amazon and Google's smart speakers, thermostats, and doorbells. When consumers watch sports and movies, they want large screen televisions, like the 65-inch ones sold by Samsung, LG, and Sony, which are about 35% more expensive than the average TV. As for PCs, that market sure isn't growing like it used to, but certain segments within that market, like gaming PCs made by Dell and HP, remain in demand. What categories are under pressure? Basic headphones, small screen TVs, and thanks in part to smartphones, traditional point-and-shoot cameras. And speaking of smartphones, the U.S. smartphone market this year is expected to decline nearly 9%. For Nightly Business Report, I'm Josh Lipton, San Francisco.
U.S. Steel is making cuts, and that is where we begin tonight's market focus, with the company saying it plans to lay off nearly 200 workers at a Michigan plant because of low prices and soft demand for steel. The steelmaker says that the layoffs will affect employees in nearly every area of the facility, and it could last beyond 6 months. Shares were down a fraction today to $12.31. Medtronic saw an increase in its demand for its surgical instruments and diabetes devices, which helped the company top Wall Street estimates. The medical device maker also raised its full-year outlook. Stock rose more than 2% today to $106.91. Madison Square Garden posted a wider than expected loss, and it fell short of expectations. The entertainment and sports operator was hurt by increased personnel costs and expenses connected to a proposed spinoff of the company's sports business. Shares dropped nearly 9% today to $267.33.
Cigna is reportedly seeking a sale of its group benefits insurance business, which could be worth nearly $6 billion. Reuters says the health insurer is working with an investment bank to sell the unit, which includes life insurance and disability coverage for groups of company employees. The stock was down more than 1% to $161.15. Endo Pharmaceutical is reportedly close to making a deal over opioid-related charges. The Wall Street Journal says the drug maker is looking to finalize a $10 million settlement with 2 Ohio counties that named the company. Endo's shares rose more than 18% to just about $3.02. Boeing plans to hire a few hundred temporary employees to work on its grounded 737 MAX fleet. The workers will be providing aircraft maintenance and customer delivery preparations. Boeing was off a fraction to $331.75. And after the bell, the home builder Toll Brothers posted better than expected results. The company cited low mortgage rates, a limited supply of new and existing homes, and strong employment. Shares were volatile in the after-hours trading. They closed the regular session up more than 1% to $36.91. Last night, we told you that the Business Roundtable is redefining its statement of the purpose of a corporation to better reflect decisions based on stakeholder values and not solely on shareholder values. Last night's guest thought that move was a bad idea. Joining us to show an opposing view of that is Martin Whitaker. He is the CEO of the nonprofit research firm Just Capital. Welcome. Nice to have you here, Martin.
Thank you, Sue. Thanks for having me on.
Our guest last night made the point that he thought it was a bad decision. He said it had been put in place before and it didn't work. And because shareholders are basically giving their money to the corporation, they should be put first. What's wrong with that argument?
Well, for one thing, it's not really the case that looking after your workers or treating your customers well or making great products or investing in the communities where you operate is antithetical to serving your shareholders well. It's not an either-or game. What we found is that businesses that actually look after their stakeholders do better in the market. Mm-hmm. So we think it's a great move. We applaud what Business Roundtable has done. This is a historic moment, we think, and it also aligns with how the American people want companies to behave. We've surveyed thousands of people over the last 5 years, all across America, all different backgrounds, mm-hmm. and this is exactly what they tell us.
This guest from last night that we're referring to is Charles Elson. He runs the Weinberg Center for Corporate Governance at the University of Delaware, and his point was, look, when you're trying to please everybody, you end up pleasing nobody. Here's what he said. Listen.
If the watch stops, it still gets the time right twice a day. If you've got multiple constituencies you answer to, you're going to get it right for somebody, but that doesn't mean a healthy business. And for shareholders, being deep-sixed like this, particularly given the fact that today, everyone's a shareholder through their retirement plans, state pension plans, and whatnot. It really will harm, I think, accountability of management to the shareholders and the public.
Essentially, maybe the company loses focus when they get away from the idea that it's all about profitability. What do you think?
I think he's completely wrong. You only got to talk to leading CEOs today to understand that the way to build a healthy company is to look after all of your stakeholders. Shareholders will win in the end. Our own research and our own data and our own funds show that. Unfortunately, I think this is a view that I think, reflects history, not the future.
Also, there are those who are making the point that income inequality has partly been a product of companies putting the bottom line before other things. I would assume you would agree with that.
Absolutely. When you look at the income inequality in this country, when you look at how we need businesses working for more Americans, we need to get the American dream back. We need life breathed into it. Jamie Dimon, the chairman of the Business Roundtable, said the American dream is fraying, but it's alive. Our own work shows that people just want a fair shake. And I think if they think the business is working for them, not against them, they think that people are going to be, sharing fairly in a company's profits. That's going to make them better employees. They're going to serve their customers better. And guess what? Management, shareholders, they're going to win. Now, it's not easy to do, but we see companies doing that all the time. That's what we do for a living at Just Capital. We track that. And the time has come, we think, to really, put that center stage. And now the next stage is, okay, let's track companies and see how they're actually doing on implementing this new stakeholder model.
Mr. Whitaker, thanks so much for spending time with us.
My pleasure.
Martin Whitaker with Just Capital.
And coming up, why a fast food company's secret sauce has nothing to do with food.
Here's a look at what to watch for tomorrow. Retailers report earnings, including Target, Nordstrom, and Lowe's. And we'll find out if lower mortgage rates help lift sales of existing homes in July. And the Federal Reserve releases its minutes of the last meeting where it lowered benchmark interest rates. And that's what to watch for on Wednesday.
When you think of innovation, you likely think of Silicon Valley, not fast food. But Domino's is very much into innovation, and it's one example of a company that will not rest until it figures out how to improve not pizza, but pizza delivery. Kate Rogers is in Ann Arbor, Michigan for us.
Domino's may be an established global pizza powerhouse, but in its new innovation garage, it's looking more like a startup. It's here where teams from across the company come to collaborate and brainstorm new ideas that are not related to the menu.
We've put this in place really to help us continue to accelerate innovation in all things delivery. So we're able to stand up or break down a store in a matter of hours. We can look at how we interface with things like this neuro robot, how team members utilize the technology in the stores to make sure that we're as efficient and as cost effective as we can possibly be.
Delivery has become a focal point for the industry, so there's a dedicated space for testing new offerings, including GPS tracking for orders, which is expected to roll out by the end of the year. E-bikes are also being looked at as a way to deliver food in certain geographic areas. And there's this. The Neuro Robot is also being deployed in Houston later this year. It's an unmanned vehicle that could show up at your door.
To use the Neuro, customers simply enter a code right here.
Enter your 4-digit access code. Great. Opening doors.
The doors open on up. You grab your pizza and go. There's also no tipping necessary.
Domino's isn't the only major restaurant letting investors and shareholders behind the scenes as it innovates. Starbucks also has a hub called the Trier Center, where it's testing out new menu items, delivery techniques, and store formats at its headquarters in Seattle. For Domino's, it's important to develop new delivery ideas on its own, unlike many of its competitors who have teamed up with companies like DoorDash and Grubhub. Allison maintains keeping delivery in-house as Domino's continues to expand and put stores closer to one another will be the right strategy for the brand long-term.
The first reason is we're not going to outsource the customer experience to someone else. So we want our customers interfacing with us through any one of a number of 20-odd ways that they can order pizza from us. But when that delivery happens, the only human interaction is with that delivery expert, and we want that to be a Domino's trained delivery expert. So we own that process from start to finish.
As the battle heats up in the fast food space with delivery now available for nearly any type of food customers are craving, companies are working overtime to stay ahead and innovate. For Nightly Business Report, I'm Kate Rogers in Ann Arbor, Michigan.
Before we go, here's another look at the day's final numbers on Wall Street. The Dow fell 173 points to 25,962. The Nasdaq was down 54, and the S&P 500 slipped 23. That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us, and we'd like to remind you that this is the time of year your public television station seeks your support.
I'm Bill Griffith. Thank you very much for that support. Have a great evening. See you tomorrow.